Thank you very much. Now we are coming to the financial presentation and our ESG journey, presented by our group CFO, Abdullah Zaman. Before taking his current role, he has also been the CFO of Ooredoo Qatar, and he has been with the company since 2013.
Good morning, ladies and gentlemen. Thank you for joining me as I discuss Ooredoo's solid financial position and the progress of our sustainability and transformation journey. A growing group revenue is my first slide to cover in this presentation. In this slide, we are looking at the growth trajectory of our group revenue. Revenue has shown a strong and sustainable performance since 2020. Good to know that we marked a 4% increase from 2020 to 2022, a 2% increase year on year on the first 9 months of 2023. The growth in revenue is driven by our operational companies, a strong performance in local currency term. Also, the growth is underpinned by market position, exceptional customer experience, diverse product offering, superior network quality, and smart Capex deployment strategy. In addition, in 2023, the revenue growth was primarily led by our operation in Iraq, Algeria, and Kuwait and Maldives. My next slide will be covering group EBITDA and EBITDA margin. This slide shows our consistent focus on efficiency and operational excellence over the years. Our EBITDA margin has been consistently north of 40%. Happy to report positive trend for the 9 months of 2023. Our EBITDA growth story is strong, supported by revenue expansion and cost optimization efforts. Initiatives such as our Braveheart transformation project, which was launched in 2020, have played an important role in enhancing operational efficiency. As we are aiming to further optimize costs and further strengthen operation efficiency, our next step, including the introduction of global cost benchmark program. Next slide, under the Braveheart transformation project, we introduced more than 700 initiatives across our operational, aimed at enhancing profitability and efficiency in our core telecom business. These efforts brought positive results with a noticeable plus 1% point improvement in both the EBITDA margin percentage and OPEX over service revenue ratio compared to 2020 level across our OPCO. Our revenue initiative and cost initiative are listed on the slides. Slide number 6. We continue to focus on Capex efficiency and are guided by strict and centralized management process that target securing high return and top-notch assets. In the year from 2020 and 2021, our Capex number told the story of solid upfront investment that have been made as a foundation to have best-in-class network. So that majority of our network rollouts have been successfully executed, reflecting on the ongoing decline in overall Capex and Capex intensity. This instructed strategy is reinforced by the Smart Capex program, which enable us to assess OPCO Capex profiles and expected return. Despite the focus on efficiency, we remain committed to selective strategy investment in areas like fintech and IoT. These initiatives aim to diversify revenue stream and create synergy that strengthen the core business and help us in journey to become a smart telco. This slide shows cumulative benefits of our business transformation. Our free cash flow margin have moved up more than 4% points since 2020. Free cash flow growth is a major focus for us. Our focus on operational efficiency and overall Capex discipline enable us to invest and still deliver solid free cash flows. We are delivering in our targets for 2023. Our result for total 9 months of 2023 reflect our focus on executions. Revenue growth for the 9 months of 2023 is ahead of guidance. Our wide range of transformation efforts have resulted in 43% EBITDA margin for the 9 months of 2023. As we close the year, we are expect our EBITDA margin would fall in line with our guidance. We have 3 billion riyal of Capex, with most of the spend expected in the last quarter of 2023, in line with our historical quarterly trend. Building on this momentum, our outlook is positive. We expected continued revenue growth and are dedicated to improvement our Capex efficiency on the medium term. As you can see from this slide, we have significant deleverage and de-risk our balance sheet. We are now 0.9x leverage ratio, which is below our board guidance. We have got here thanks to our sharp focus on cash generation. However, this active managing our portfolio of OpCos has also played a part on the deleverage. The board guidance range of 1.5x to 2.5x is expected to be maintained for now as the company execute on tower and data center plans. Turning to our debt profile and to put some context on our funding strategy, some key point to note. We are rated investment grade. We have a strong liquidity profile. We have been actively manage our repayment schedule. We are structurally hedged against further rate hikes as 95% of our debt is on fixed rate. Including undrawn borrowing, we have 14.6 billion riyals as a liquidity. This is more than enough to cover our repayment schedule on the next 5 years. We will remain watchful and takes advantage of any funding opportunity that makes sense to Ooredoo. Okay, next let's talk about risk management. In the hedge policy, our approach to manage transactional FX risk remain steadfast. OpCo will continue to hedge locally using available instrument while keeping costs within the limit. Ooredoo is a long-term emerging market players, and we have decided to maintain our strategy of not hedging translation exposure at the group level. Looking at the broader picture, Ooredoo maintains substantial 95% fixed rate debts. This significantly limits our exposure to interest rate risk. The next chart shows Ooredoo commitment to return excess cash to our shareholder. Over a period of 3 years, we have increased our dividend by 72%. I want to highlight that the dividend payout for 2022 was at the top end of our guidance. Looking ahead, our dividend outlook remain robust. We are aiming for a payout ratio on the range of 40 to 60% normalized earning. This approach ensures balance between rewarding our shareholders and retain capital for strategic investments. It is a testament to our commitment to sustain growth. These slides show a view of how we think about the proceeds we will receive from some of the projects. We will invest in our infrastructure. We want to have leading digital network across our various market. We will maintain an optimal capital structure that give us the flexibility to pursue value, a creative opportunity. And last but not least, returning cash to our shareholders. Next is the ESG coverage. We made some progress with our ESG initiative. In 2022, some of the key sustainable highlights were increase of 1.3% in female across total workforce. We invested more than $46 million in the communities. We record zero number of sustainable complaints concerning breach of customer privacy. In 2023, we have issued a new policy, one of which being the human rights policy. We released our third ESG report. During 2023, ESG KPI were set in place across our OPCO for the first time. In addition, an internal assessment has been conducted at each OPCO level on their available policy and disclosure, and a new set of policy disclosure will be publicly available and disclosed by year-end 2023. For the year 2023, OPCO will have their own local ESG report. Other collaboration projects include joining the GCC Innovation Hub and the Nokia ESG Customer Advisory Council for MENA region, which we both announced during COP28. Looking ahead, we are updating our ESG report in 2024 in line with the global IFRS and ISSB reporting standards. We will put sustainable strategy and framework in place and establish committees to oversee all OPCO ESG activity. We aim to be at the forefront of the industry and region in ESG benchmark reporting and disclosure. This is the end of my presentation. Let me conclude with the following point. I want to emphasize in our goal to position ourselves as the best-in-class organization for the long term. Our recent performance has been solid. Our financial strong with a healthy revenue, EBITDA, and free cash flow growth. These indicators show our current success but lay the foundation for sustainable excellence. Together with our cost management efforts, we are exercising strict and centralized Capex management. Building capacity for future growth is key. In summary, we are not just aiming for short-term success, we are sharpening best-in-class organization for long-term. Our financial strength, operational efficiency, strategic investment, and commitment to sustainable will help us along our path to be a smart telco. Thank you very much.